And shares of Target are selling off again today after missing earnings estimates and cutting its full-year outlook. The reasons they gave were weak consumer spending, tariff uncertainty, and backlash against their DEI rollback, which caused sales problems in the first place. Just take a look at where Target now stands in market cap. It's shrunk in size to the extent that peers like Walmart, Costco, Home Depot, and Lowe's are now outpacing it by hundreds of billions. Target's all the way to the right of your screen there. It's only $42 billion in market cap. Nike is more than double its size right now. But it's not just Target, of course, struggling with consumer spending and tariffs. My next guest is keeping an eye on how all the retailers are handling this uncertainty. Dana Telsey is here on set with me. She's CEO of the Telsey Advisory Group. It's great to see you.
Thank you so much for having me.
So Target in particular, I know you don't cover it specifically, but would you describe its problems as execution and company specific?
Yes.
It's hard not to at this point.
It's been too many quarters, and frankly, the fact that you had transactions being down, which is similar to traffic, that's a headwind. Every company has a lot of issues going on because tariffs is requiring agility like you haven't seen. When we started the year, I said this was going to be a year of social, service, supply chain, and surprise. The surprise is there, as is the supply chain. But every single company is trying to figure out how much do you divert in terms of manufacturing, how much do you share the cost with your manufacturing partners, and third is how much do you have to change the prices to the end consumer. Yeah, that'll be what we'll see as we go through the next few months.
So it's maybe you would almost say separating the wheat from the wheat from the chaff. In other words, so Walmart comes out and says it might have to raise prices. This was national news basically, and it looks like we're heading into that. But as far as the consumer's concerned, when they're more choosy, when they're somewhat under pressure, when tariffs are coming, you think that just piles the pressure on a company like Target?
Oh, it does. And the reason why is they're more discretionary than what a company like Walmart is. Walmart is more grocery. Target's more discretionary. You look at the choice of discretionary, consumers are pulling back. They buy what they need. When you're seeing brand leaders overall, you're seeing change. Look what happened last week. We saw the earnings from Birkenstock. You saw Tapestry. They were solid. The newness and innovation is driving demand, but it's a higher price point.
By the way, how about Home Depot and Lowe's? I mean, again, putting up solid results. You and others in the space have talked about how housing-related names are actually at a positive inflection point because people are now so in their houses, they're starting to have to hit that kind of remodel or spend cycle again. Those are also standing out as a way of saying this weakness is not broad-based.
Exactly. And look at the pros results at Lowe's today. Those pros results were very good. And frankly, some things that we've been hearing about home furnishings, there's an update going on that you didn't have in the past.
So what about some of the mall-based players? We have, was it American Eagle struggling the other day, withdrew their guidance or something to that effect? So who would you sort of say still has positive upside opportunities, is gaining share? Gap maybe is one of the names right now.
So what we're seeing out there in terms of who seems to be gaining, we didn't mention the off prices today, and you had TJX just report. Yeah. They basically have opportunity to continue to gain share. When I think of some of these specialty apparel retailers out there, the weakness at American Eagle, you look at Abercrombie, we're going to see a difference between the Abercrombie and Hollister divisions, and I think we're going to see strength in Hollister. At Gap, like you mentioned, I think the Gap brand is more relevant today than how it had been in the past. But overall, you're seeing a more discerning consumer across the board. Watch for price point increases as we're going through back to school. And we're going to see some companies start advertising and marketing back to school June 1st.